How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world, Options Trading Academy. And what we're getting ready to go into is our weekly stock market talk. It's been a really rough week for a lot of people. However, it's been a good week for other people. Kind of depends on what side of the market that you're on. We're going to look at what we think is going on in the market next week, what happened over the past week, and some of the things that you can look at to put yourselves in the best position to be profitable. We can't guarantee any profit. We're not financial advisors. We're not fiduciaries. However, we are here to get a market analysis based on our perspective, to try to raise the level of intelligence of people that will kind of want to understand how you can utilize the market to get what they want. So what we're going to ask you to do is stop right now immediately and just do me a favor and hit the like button. If you're not a subscriber and you think you want more content like this, subscribe, and also share this out to somebody that you think can get value from it. And if you don't have anybody in your circle that you think can get value from this kind of content, I would ask you to examine your circle and where you think you're going with those kind of people around you. Let's go ahead and get into it. Looking at the seasonality, what we normally see is that January historically is bearish. Okay. So one of the things I try to get people to really understand is that I look at seasonality to get a basic understanding of where we think the market is going to be headed from an overall standpoint. And then what are some of the macroeconomic indicators that can push us towards that particular seasonality or maybe push us away? But what we're seeing is that historically in January, the market is bearish. And then February, we get a bullish run and then we go back into a bearish trend. And so what we're looking for now, and this could change because of some of the things that are coming up, are we going to stay on this particular bearish trend? Looking at the 10-year, we closed at 1.7. which was a little bit lower than where we had kindly peaked out during the week at around 1.8. I think it hit maybe 1.85. 1.86, 1.87 is about where we hit this week. We closed at around 1.7. And I think the longer we stay at these numbers, the more the market will get desensitized to the actual number. Looking at the economic calendar, what we have coming up in this next week, let's go ahead and get into it. What we're going to be looking for is the FOMC statement and then Jerome Powell doing a news conference. So the market may be a little bit choppy or very volatile early this week until this particular conference is over. Then we know we're going back into jobless claims. And then also what we want to look at is real consumer spending and then some of these inflation numbers from a year to year, month to month standpoint. I think those are going to be really interesting on Friday, January 28th. Not going into expected earnings. We're going into a really strong earnings week, really strong, because we're starting earnings season with this week coming up. And we're pretty much seeing everybody report. Some tech companies, but also a lot of what I call S&P stalwarts. IBM coming out, Halliburton, Phillips, PetMeds, Consumer Bank, insurance companies, Johnson & Johnson, Microsoft, GE, Texas Instruments. You know, Tuesday is a crazy day for earnings. Wednesday, we got Tesla, we got Boeing, we got AT&T, we got Levi's, we got NASDAQ, we got Progressive Insurance, we got Sands Vegas, we got Kimberly-Clark. Thursday, we got MasterCard, we got Apple, we got McDonald's, Visa, Valero, we got U.S. Steel, we got JetBlue, the Blackstone Group, we got Western Digital, Dow, we have Boot Barn, we got Tractor Supply. That's going to be interesting. We got Southwest. We got a lot of airlines on Thursday. Then we have Friday, we got Chevron, we got Caterpillar, we got 66, Phillips, we got Colgate, we got Church and Dwight Company. I believe they make Arm & Hammer. So I want you to really understand is that, third Wednesday, I forgot, Freeport, McMoran, Copper and Gold on Wednesday. We got a lot of really strong earnings coming out this week. And so maybe these earnings, if the impression of these earnings is really positive, it can maybe turn the market back bullish again. We just got to see. The earnings is not super tech heavy. It's not super NASDAQ heavy. It does have some companies that are in the NASDAQ like Tesla and like Apple. However, and Microsoft. However, we just want to kind of examine what do we think is going to stop this downward turn because it's been a really aggressive sell off over the past, I want to say really 2 weeks. Now let's go into the overall charts. So what we're looking at is the SPY. And we talked about before we had 470 as a resistance point. And what we've seen is that we sold off of that really hard. So we closed around, what did we close at? 437 on Friday. So we've seen over the past few days, it's just really hard selling off of that 470, So 113, it closed at 464. And then pretty much every day after that, it just was like, nah, we want to stay as far away from that resistance point as possible. So we're down here now at almost at our November range. Okay. So the same thing. Are we going to continue to sell off? Okay. So let's look at this chart from a little bit of better perspective. Are we going to continue to sell off, pushing down towards 425? Are we going to get some sideways consolidation? Are we going to move back up towards that 470? Now looking at the QQQ, same scenario, right? We know this has been a big sell-off. I think the NASDAQ is down 10%. So we're seeing the same thing. We had the 400 as a resistance point. It's not even close to that, right? So we're down here, like I said before, around early October levels. Okay, so just a massive sell-off off the 400, rejected off the 390, and just been selling off really hard. And we want to try to figure out, where do we stop this thing at? Are we going to start consolidating around here because we bounced off this? I think that's a 350. We bounced off the 350, started moving up, so we bounce here again, or will it still be sellers? And we push, down here to this 325 to 350 range. So this is what you want to kind of look at. One of the things is you want to start realizing now as a trader, right? So the cat is out of the bag. The market is bearish, which means that IVs on puts is going to be very elevated. Now, this may be the worst time to enter into a put unless you think there's a lot of continuation. This is not investment advice. It's just my own analysis. I was bearish on this thing early, right? Because I have my own way of looking at the market, and I actually do this for real. So I was bearish on a lot of this stuff early. I was bearish on this stuff like December. Okay. If you're looking to get into it now, because I saw the same thing, this same scenario happened when we had the pandemic. The market turned extremely bearish. But then the problem is trying to find plays difficult, because with the overall market being bearish, then the IV gets pumped up on every individualized stock on the put side. Therefore, you want to be really selective, because everybody's bearish now, means the market maker makes a lot of their money on puts by just spiking up the IV and getting people to buy puts. How long is this bearish trend going to last on an overall standpoint? And so if you're looking at bearish companies, you got to really be certain that that company will continue to be bearish, because the market's going to eventually turn around, but certain companies are never going to recover from this. They're going to just continue to pull all the money out of those companies because they were overvalued. They were overvalued, and therefore they were overpriced from the gate. And what we're seeing is that we're seeing a massive correction that's not only going to take place in the overall market, but once the overall market starts to rebound, because it will, then what you're going to see is that a lot of individualized companies are never going to recover from that. So even though Apple may be red on the day, it doesn't mean that Apple's going to stay red on the day. So that's what I want people to really understand. I want you to make sure that you manage your risk properly. Make sure that you don't chase a trend that pretty much is getting ready to extinguish. So I will look from some type of confirmation from whatever type of indicators that you're using to confirm trends. They're kind of trying to determine it, because a lot of people are going to try to jump on bandwagons now, and it might be too late, or it could be the start of more continuation, because if we get another 10% drop in the NASDAQ, I think we're officially at the correction standpoint. So if you got any questions, reach out to me. If you have any comments about this particular scenario, hit me up in the comments. This is David W. Williams, also known as Diamond Dave. I'll talk to you later.